Hey there, and welcome to Real Investment News. I'm Mike O'Neill. So tomorrow's tax day, and it's a good time to look and see who is paying their fair share, especially after that big tax cut that passed at the end of last year. Now, Lance Roberts goes into detail in his post, the tax cuts and the failure to change the economic balance. And yeah, you can see where this is going. First, we have the data from the Tax Policy Center, and it shows the share of the total income taxes paid. The green lines are the percentages from 2017. The blue is for this year, 2018. And you can see how those making about $150,000 or more paid about 84% of the taxes last year. And that is now up to 87%, while the rest of the population is actually carrying less of the tax burden this year compared to last. But percentages can be deceiving. Despite this increase, the top 20% are actually paying a little bit less. Why? Well, with the tax cuts, that means that the revenue drops. And even if the percent you pay is more, when you look at dollar figures, it's actually less. Now, let's show you this. It can be a little complicated. Let's say that the government is collecting $100 in year one. If the top 20% pays 84% of that, well, that's an easy calculation. That means that they paid $84. But let's go to year two, where the government is now only collecting $90. Well, if you're paying 87% of that, well, it may look like you're going to be paying more, but the reality is you are actually only paying $78. Now, the tax cuts were meant to benefit the middle class, and we hate to say we told you so, but we told you so. Now, first of all, if the tax cut had really been focused on helping the middle class, it would have been directed at these two huge wedges of the federal revenue pie, 48.8% that comes from individual income taxes and the 33% that comes from the payroll taxes. That's more than 80%. But that didn't happen. Instead, the focus was on the 8.8% that comes from corporate taxes. Remember, the federal corporate tax rate was slashed from 35 to 21%. The promise was that it would free up money for companies to invest in the company and their employees. And while there were a lot of headlines of companies giving away big bonuses and some wage increases, well, that only involved about 6.3 million employees of the 147.6 million workers in the U.S., and only 385 of the 26 million companies in the U.S. The grand total being spent on bonuses and wage increases, just $6.5 billion. So where is this money going? Well, stock buybacks, which benefit the CEOs and shareholders. Authorizations for stock buybacks have increased by $253 billion. As always, Lance has a lot more to say in his article. You can read it and take a closer look at these charts at realinvestmentadvice.com. But that's it for me right now. Thank you so very much for watching. Please remember to follow us on Facebook, Twitter, YouTube. Check out our past reports at realinvestmentnews.com. I'm Mike O'Neill. We'll see you again in a couple of hours.